It began as a tremor, but it has now turned into a full-scale financial earthquake. The Japanese yen, historically the safe haven of Asia, is in a historic freefall. But if you think this is just a story about fluctuating exchange rates, you are missing the signal for the noise. This isn't market volatility. This is a targeted economic dismantling. While Tokyo scrambles to save its dying currency, Beijing has issued what insiders are calling a final warning. China is quietly pulling the plug on the G7 financial order, and Japan is the first casualty. We are watching the end of an era in real time. The third largest economy in the world is breaking, and the shockwaves are about to hit your wallet, no matter where you live. The mainstream media will tell you this is about interest rates and inflation. That is a lie by omission. The reality is far more dangerous. We are witnessing a silent war between the old G7 banking system, led by the US and Japan, and a new, parallel financial order being built by China. Japan is the front line. As the yen collapses, it drags the entire G7 alliance into a crisis. China knows this, and Beijing is no longer playing defense. They are capitalizing on the chaos to flip the global financial system upside down. In this video, we will expose the specific mechanism China is using to drain the yen's power. We will reveal the shadow banking moves that are rendering US sanctions useless. And finally, we will outline the 3 terrifying scenarios for what happens next, including one that could end the US dollar's dominance in Asia forever. To understand why this collapse is happening now, we have to look at the trap Japan built for itself. For decades, the Bank of Japan ran a grand experiment. They kept interest rates at 0, sometimes even negative. They printed endless money to force people to spend. They thought they could defy the laws of economic gravity forever. They were wrong. When the rest of the world raised rates to fight inflation, Japan stayed frozen. They paralyzed themselves. Now, global investors are fleeing. They are dumping the yen to buy dollars and euros, draining the lifeblood out of the Japanese economy. The currency isn't just weakening, it is being abandoned. This is where the spiral widens. A collapsing yen acts like a tax on every Japanese citizen. Japan imports almost all its energy and food. When the yen dies, the price of survival skyrockets. Fuel costs are crushing factories. Food prices are strangling households. This is the nightmare scenario for a developed nation, import-driven inflation that destroys the middle class. But the pain doesn't stop in Tokyo. Japan is the largest holder of U.S. debt. If Tokyo is forced to sell those U.S. treasuries to save their own currency, it crashes the U.S. bond market. The contagion is global. Japan is the thread that, if pulled, unravels the entire G7 sweater. While Japan bleeds, China is circling like a shark. This is where the final warning comes in. Beijing isn't using tanks, they are using leverage. As the yen creates instability, China is presenting itself as the new stability for Asia. China has been quietly reducing its exposure to the US dollar and the G7 banking system. They are building a fortress economy that doesn't need Western approval. While Tokyo begs the US for help, China is telling its Asian neighbors that the G7 system is broken, urging them to join their system instead. They are effectively weaponizing Japan's failure to prove that the Western financial model is obsolete. This is the part the financial news ignores. How is China doing this? They are building a shadow G7. Through the cross-border interbank payment system and massive gold accumulation, Beijing is creating a way for countries to trade without ever touching a dollar or a yen. They are encouraging currency swaps, trading yuan for oil, yuan for minerals. Every time the yen dips, the yuan looks more attractive to emerging markets. China is essentially saying, why hold a dying Japanese currency when you can hold a stable Chinese one backed by gold and manufacturing power? It is a soft takeover of Asia's financial plumbing. This brings us to the most critical point, Beijing abandoning the G7 system. For 50 years, if you wanted to be a global power, you had to play by G7 rules. China has stopped playing. They are no longer coordinating with Western central banks. They are letting the yen crash because it serves their narrative. The West is in decline. By refusing to help stabilize the Asian markets, China is accelerating the chaos. They are betting that when the dust settles, Asian nations will choose the redback, the yuan, over the greenback or the yen. So where does this spiral end? We have analyzed the data, and there are only 3 possible paths forward. None of them are painless. The first path is the suicide hike. Japan finally panics and raises interest rates aggressively to save the yen. The result is that the currency stabilizes, but the Japanese economy crashes into a massive recession. Zombie companies go bankrupt, employment spikes, and the global stock market takes a hit as cheap yen funding disappears. It saves the money, but kills the patient. The second path is the death spiral. Japan does nothing, hoping the storm passes. The result is that the yen hits 170 or 180 to the dollar. Hyperinflation risks begin. The Japanese public loses faith in their government. Capital flight accelerates. Japan effectively becomes a second-tier economy, and China becomes the undisputed master of Asia. The third path is the Eastern pivot, and this is the scenario Washington fears most. Japan realizes the U.S. cannot save them. To stop the bleeding, Tokyo quietly begins to align closer with Beijing's economic sphere, accepting yuan-based trade deals to lower their import costs. The result is that the G7 fractures. The Iron Curtain of finance moves, leaving Japan in the gray zone. The U.S. loses its unsinkable aircraft carrier in the Pacific economy. We are watching the slow-motion disintegration of the post-World War II financial order. The yen is the canary in the coal mine. If a currency as big as Japan's can be humiliated like this, no fiat currency is safe, except perhaps the ones backed by industrial might and gold. China isn't causing the crash, but they are guiding it. They are dismantling the G7's influence 1 percentage point at a time. The yen's collapse is simply the signal that the transfer of power has begun. The question you need to ask yourself is this: if the G7 system is cracking in Japan, how long before the cracks reach the US dollar? Are you prepared for a world where the East sets the price of money? We want to hear your analysis. Which of the 3 scenarios do you think is most likely? Will Japan commit economic suicide to save the yen, or will they pivot to China? Leave your predictions in the comments below. This is Real USA Report. We verify the threats the others ignore. If you want to stay ahead of the collapse, smash that like button and subscribe. The financial map is being redrawn, and we are here to help you navigate it.